Hi everyone, I'm Kendra DiGrazia with Ballou Company Real Estate Services, and I'm here with Tanya Quackenbush at Movement Mortgage in Chico, California. And I wanted to get together with Tanya today to go over some ways that you can lower your mortgage payment when you're buying a home right now. So Tanya, do you kind of want to start and share what's the most common way that people are lowering their mortgage payment right now?
Yeah, one of the most common ways right now in the market is to pay points to get a lower interest rate to lower your mortgage payment.
Okay, definitely, because we've seen in the last 2 years since COVID, interest rates have really skyrocketed. So, and that makes a big difference on your overall mortgage payment, your monthly payment.
Yes, and something else to keep in mind too in this market is, do we expect to see interest rates drop, and will we have an opportunity to refinance into a lower interest rate? So something that I do with each and every client is look at those options and also look at those break-even points, and does it make sense? Do you think that you'll refinance in a year or 2 or 3, and is that break-even point make sense for us? So we'll definitely check that out. And I think at the end of the day, as long as someone is comfortable with that monthly payment, so for that lower interest rates, if that gets them to a comfortable situation and scenario, then I'm always supportive of that.
Yep, so that's probably the most common ways that we're seeing right now. Another way is that you can shop around for your homeowners insurance. So we've also seen homeowners insurance skyrocket in California due to our wildfires. Wildfires, we have natural disasters too, so, and a lot of the insurance companies are pulling out, not offering insurance coverage. So shopping around and trying to lower your homeowner's insurance premium could save you a lot of money each month.
Yeah, absolutely. Or if you have 10% down on a conventional loan, you could also waive your impound account, and you can choose to pay homeowners insurance and taxes separately. So that's a good way to lower your mortgage payment, but you have to keep in mind, as a homeowner, you need to come up with that lump sum to pay your annual premium, homeowners insurance, and the taxes, of course, twice a year.
Okay, well, that's a great option too. Is there any other options that maybe aren't so common for buyers?
Well, with less than 20% down, most of us are familiar with mortgage insurance, and you can pay a single premium one-time upfront mortgage insurance buyout and never have MI on the loan again. So that's another way to get
amazing.
The lower monthly payment. Yeah.
I recently just came across that. I wasn't really too familiar with that. I don't know if any of my buyers have done that before, but I've heard that it can even make a bigger impact than just buying your interest rate down.
Yep, absolutely. Again, we'll look at that break-even point. Does it make more sense to buy down an interest rate or buy out the MI, and make sure that we're in a comfortable spot?
So that's also a really good little tip, is make sure you have a loan officer that's shopping around and looking at your break-even points. You don't want to just go with the loan officer who has the lowest interest rate. You really need to know what your numbers are. And yeah, everybody's break-even point is going to look a little different, whether they want to buy down their interest rate or prepay their mortgage insurance if they're putting less than 20% down. So it's really good to have a loan officer that's going to run those numbers for you before you even jump into escrow or get too far along.
Yes, thank you.
Thank you. We'll leave our contact information below, so if you guys have any questions, feel free to reach out. Let us know if you've done any, if you've used.
If you have any experience with these options and have taken advantage of it, anything, we'd love to hear your feedback.